going to talk about is, just so I tell you, we will be recording. We will be recording the presentation, just so you know, and you want to use it for later. So we did create an agenda, and we'll talk about regulation requirements. We're going to go over the risk assessment, risk rating, disaster recovery during the initial phases. That's before you get it in contract with the vendor. At that point, we'll have a 5-minute break. Then we're going to come back and discuss contract review and look at some case studies that CUVM is going to present to us. If needed at that time, we'll have another break, and then we'll follow up with periodic and ongoing monitoring for your overall program. And CUVM will do a demo at the end for those credit unions who are looking for some help with this process. Keep in mind, we created this agenda, but we don't have to stick to it. If we start getting some good conversation and we decide that we miss some of this or we don't go along with it, it's whatever it is, you show us that you need or topics that you want to talk about. And if this is not it, we're happy going off pace if needed. And if we find that maybe later in the year we need to have a part 2 to this, then that's always an option as well. So unless anybody has any questions, if I can get some thumbs up in the chat, I'll know it's okay to proceed. I say that, but I can't see the chat. So if you gave,
so I Laura, can see it, and it's under the react. There's a reaction button, and you can put a thumbs up if you would like. We're getting bunch of thumbs up. So
okay. So Laura Gober is our first presenter today, and she's going to go over the regulatory requirements for your vendor due diligence, evaluating third-party relationships. Let me tell you a little bit about Laura. She is Vice President of Compliance and Regulatory Services for the League of Southeastern Credit Unions. Laura comes to the League through the LSCU Georgia consolidation. Prior to joining the LSCU, she was the VP of Enterprise Risk Management, BSA officer for Atlanta Postal Credit Union, one of the largest credit unions in Georgia. In her current role with LSCU, Laura heads up the best-in-class compliance department that serves credit unions in all 3 states, manages shared compliance consultant program, and oversees the compliance products that they offer. Laura holds certifications as a BSA compliance specialist, credit union compliance expert, and credit union enterprise risk management expert through the Credit Union National Association and Diversity, Equity, and Inclusion in the Workplace through the University of South Florida. Thank you for speaking today, Laura.
You're welcome, and welcome everyone. Most of you probably know me because I seem to be out there and about. Like I said, yesterday we were down at the Georgia Capitol for the Georgia Advocacy Conference, and I know a couple of you were there yesterday. And I'm going to kind of start out before I start with my slides, just talking about that, because we did have the Department of Banking and Finance there yesterday. And and that's why this workshop is perfect timing, because they went over the 3 priorities that they have for state chartered credit unions in Georgia. And I'm sure that for Alabama and Florida, there's going to be some similarities there. But for Georgia, they cybersecurity, information technology systems, and this is their exam priority. So these are things that they're going to be looking at when they go into the Georgia credit unions. Review of the credit portfolio and interest rate risk. And the reason I bring those up, and one of the things that they specifically mentioned yesterday, with all 3 of those priorities, a lot of times credit unions partner with third-party vendors to help either provide all of those services, especially when it comes to cybersecurity and technology information. A lot of credit unions partner with folks to do that. So they will be looking at your third-party vendor relationships on all of those when they go out to your credit unions if you're in Georgia. And like I said, I'm sure that Alabama and Florida, their conferences have not come up yet, so I have not heard what their priorities are as of today. But I'm sure even with CECL, or even with any of the things that are coming through NCUA, third parties are a big key to these things. So like I said, this is a perfect time if you have questions as we go through. I'm going to be going doing a short piece of review of the actual regulation. And then as we go through the case studies, some of the things that I talk about, you'll hear again, but in more detail and in time for you guys to be able to ask questions. So first, I'm going to just kind of talk a little bit about third-party relationships and, you know, why do we need third-party relationships as a credit union? So, and Keela, you may need to take my slide ahead because it's, yeah, okay. So third-party relationships, why do we need them? To gain expertise. A lot of times we don't have staff that can do some of the things that we need to help our members. Managing economies of scale. Maybe we don't have enough employees that can handle, you know, from experience on our part, you know, we had members all over the country. Well, you know, if you're out where Kelly is in Colorado, you're what, 2.5, 3 hours difference. Well, when we were closed, we still had members that needed us. So we had to partner with a call center to help manage those. So managing economies of scale, reaching new members, meeting your strategic objectives. Where and what does your credit union want to do? What are your objectives? And of course, enhance member service. We always want to make things as convenient as possible for our members, and we want to always offer them new products and services. So partnering with third parties is a way that we do that as credit unions. What does this do when we start, you know, partnering with these third-party vendors for different things? Well, it causes all kinds of risks: transaction risk, compliance risk. Type in the chat, what other types of risk do you think these types of relationships could cause for your credit union? Let's see. And we'll talk a little bit about the transaction and compliance risk. Let's see what we're getting here. Reputation risk. That's the next one that comes to mind, because we are, you know, relying on these third parties to, in some cases, help our members. Yeah, everybody has put reputation risk. So good that you guys are identifying that. But transaction risk, you know, that's improper internal controls. So that's also not only on your part, but also on the part of your third party. That could be a risk. Compliance risk, making sure that they're following rules and regulations that they need to be following. We got, Melissa said security risk. Yes, security. We got several folks that put security risk there. Yes, managing that information that those folks have. So keep in mind as we go along, and we have some good things in relation to the risk assessment. So we'll be talking about that later on. So go to the next page. Okay. So as far as the regulatory requirements, NCUA put out letter 07CU13, which was dated December of 2007. So this is not a new letter to credit unions, and it was for all credit unions, federally insured credit unions. So there's no exemption for state chartered. And actually, I put here, Georgia actually has something in their code section in relation to regulation of persons performing services for financial institutions. I did look for something in Alabama and Florida code and did not find anything, and reached out to Bill Berg, who's our compliance folks person in Florida, and David in Alabama, and there's nothing specific. We just know that they want you to make sure you're managing your third-party vendors properly. So there's nothing different for Alabama or Florida, but Georgia, like I mentioned, does have a little bit, and it's basically nothing different than what we'll talk about in the NCUA letter. But so credit unions must complete due diligence. And when we look at our third parties, obviously less risk, less analysis and documentation is needed. More risk, more analysis and documentation is needed. And again, we'll be talking a little bit more about that as we go through the rest of today. So go ahead to the next page. Examiners are going to want to see that credit unions have addressed the following concepts based on your size, complexity, and risk profile. That is super key right there, because it's going to be based on the products and services that you're offering and the third parties that you're partnering with. The asset size in some cases does not matter. You're all going to have critical contracts that you're going to need to do more for than some of your, less risky contracts. But if you're a smaller asset size credit union, you may not have as many based on the products and services you have. So keep that in mind. You're not exempt, even if you're a small asset size credit union. You're going to still have to do some type of due diligence. But these are the things that examiners are going to be looking for: a risk assessment and planning, due diligence, risk measurement, monitoring, and control. So you can go ahead to the next page. Okay. The risk assessment and planning and initial risk assessment. Here's some things, and like I said, and I'll keep saying this, we're going into more detail as we go through this. So this is kind of just an overview straight from the actual letter to credit unions. But does the relationship complement the credit union's overall mission and philosophy? So have you had a discussion about how this relationship fits in with your credit union and the philosophy of your credit union? I can tell you that, and that may change over time. So these are things that you don't, it's not a one and done. You're going to want to look at this for every time you go to look at a vendor, because when I first started at the credit union, our philosophy was, we want you to always talk to a person. When you call the credit union, you're not going to get an automated system where you hit a button. A person is going to answer the phone. Well, as you grow, that gets harder and harder to do. So while we still had somebody initially answer the phone, there were some cases where they might roll over to a automated function. So as you grow, or as you add products and services, make sure that things keep it with your mission and your philosophy. What are the risks and benefits of outsourcing versus risk and benefits of maintaining the function in-house? Again, this would be based on your credit union, but having this conversation before you sign a contract is important, because you don't want to go ahead and sign something and then realize, oh, well, maybe we could have done this in-house. Make sure you're having that conversation, and all of this should be documented. Does the risk assessment of the third party consider all 7 risk areas? I'm not going to go into each of them, but they're listed here that you should be thinking about. Okay, go to the next page. Has the credit union considered the following: expectations of the outsourced function, staff expertise, criticality, risk, reward, and cost benefit? A lot of this, and when I was at the credit union, and included in our ERM department was third-party vendor management. And sometimes when you're dealing with the different departments, it's hard to get some of this done. So the more you can plan, and again, as you grow, some of these things you're going to need help with. So you may end up even getting a vendor to help, thus CUVM, but you may get a vendor that's going to help with some of this functionality or some of these things that you need to look at. But some of this is not just of the vendor, it's also of your credit union folks. So staff expertise, do you have somebody there that can handle the vendor, or that knows what they're looking for in the vendor? criticality, risk reward, cost benefit relationship, that's probably going to go above somebody that's like actually handling the vendor management. That might go to the owner of the contract. They need to do that. Insurance, impact on membership, and an exit strategy, which to me is very important. And I think we'll be covering that later on in the thing. But again, all of this is from the letter to credit unions.
Laura, let me jump in there if I can real quick, go back to that slide. Just a couple things that I would add to this is look at the fact of who handles this within your credit union currently. What is it costing them in time? Is it a cost in operational expense? Is it a cost in generation of revenue expense for you? Look at that and weigh those options as to what potentially this person could be doing elsewhere if you did outsource it. The other component to that, Laura talked about staff expertise, is when you are reviewing your vendors and you're reviewing the documents that come in with those vendors, whether it's the financials, whether it's SOC reports or SSAE 16s or 18s, who is reviewing that information and do they have the expertise? Do they truly know how to read those documents, understand those documents, and apply that information in the criticality and the risk area to apply it to your strategic objectives in your strategic organization? I always use an example of, and this is not to pick on anyone, but you may have folks within your human resource area or your people and culture area that are not expertise in an IT field or understand how to read financials even on a company. You may want to structure your program where your vendors are at least being reviewed by your CFO or a controller or someone within your organization that has that expertise, so that you're having educated folks within that area that are adapting their strengths to that area to help you in that program. Just a couple of side notes,
Yeah,
Laura.
perfect. And which I can tell you, I struggled because a lot of times, and some of you may have experienced this same thing at being at a credit union, a lot of times, depending again on your asset size, but we would have the VP of lending say, oh, can you review this contract? I'm going to sign it next week. And a lot of this stuff takes a little bit of time to be able to, one, collect, be able to, two, look at. So I know it's a struggle sometimes getting everybody on board, but I think that's a conversation that you should have. And like Kelly mentioned, is say, you know, as a compliance person or as in enterprise risk management, you're not going to know everything. So you're going to have to rely on those in your credit union, like your CFO or a controller that has those expertise to look at it. And that takes time. So I know that that gets a little frustrating because those folks that are out there that are wanting to get these contracts signed want it done yesterday. So I had to sit down and have a conversation and say, this is a process, because these reviewing these vendors and things are a process. It's not something that you get a contract and you sign it the next day. Normally you need to kind of look at that and make sure you're not signing your life away. But yes, thank you, Kelly. Okay, go ahead to the next page. So a credit union must demonstrate and understand the third party. So when you start a relationship with a third party, I know, again, this is something that I struggle with coming from compliance and being in enterprise risk management and having those folks that are in operations or in lending that all they want to do loans. They want to get these products out to the members. They want to do this. And I had to a lot of times stop and say, hey, let's make sure that we understand that this third party is a good fit for us and that it, you know, we want to understand how their organization works, how their business model is. Are they in good financial health? What other risk could be posed? So again, having this conversation, and I, you know, coming from enterprise risk management, a lot of times I hear credit unions go, well, we don't have to do that. Our asset size is not big enough. there's really no requirements out there for real person credit unions to do vendor management. It's only on the corporate credit union side right now. However, everything that you do is risk-based, including due diligence for third-party vendor management. And so everyone should be involved, and it shouldn't be just one person's, responsibility. I think that that's one thing that does get missed a lot, is the conversations that need to be had around different products and services. They'll be out there, and they might be just like we have our vendor hall at QC, and they might, a lot of times the compliance folks don't go to those, and it might be a lending person, and they go and they talk to a person, a representative of a company. They love them. They like, oh yeah, I like this product. And they come back and they say, oh, I want to sign this contract. And there's no conversation. So it's up to us to kind of help get that conversation going so that we understand these third parties, and we're not just doing it because we like the salesperson, because I have seen that happen before. Request referrals. How have they performed with other folks? I always say try to get 3. The more you can, the more people you can talk to, the better. Have there been any lawsuits? Request any licenses or certifications, and they'll go in a little bit more of that later when they're going through a file as well. Go ahead to the next page. Does the credit union have policies and procedures in place? I think it's very important to make sure you document your process, whatever that process may be, because it's not going to be the same for everybody. So you need to make sure you write down and that everybody understands what the process and the procedures are. Are they detailed, and do they outline expectations and the limit risks that the third party might bring? Do they outline staff responsibilities? I can tell you that I went back, because like I said, it's a process. And I went to my CEO and I said, whenever you guys first start talking to a new vendor, the day it pops in your head, please include us as far as compliance or ERM, so that we're at least aware of what you're looking at. So then that gives the compliance person or the ERM person or whoever's handling third-party relationships time to, say, okay, I know they're going to be looking at this. Start, if it's a lending partner, or if it's a, whatever, that you can kind of do your checking that you need to do ahead of time, so that when they do bring the contract, you could kind of have things that you can look at. I asked for a month. So I said, I need a month. When you guys decide on a vendor, can you give me a month? That gives me time. And he came back and he goes, I'll give you a week. So I had to deal with what I had, but it's hard. It's very hard with everything that you need to do with third-party relations. Kelly, you got something?
I do. I'm just going to add a couple of things here. Laura has great points with your policies and procedures. Two completely different things. What you put in your policy, I don't want to say don't get detailed, but don't get too detailed, because the examiners will hold you to your policy.
Yep.
Procedures are your internal document that you can be more specific to, that holds your staff accountable for completing the job in regarding to your vendor management program. So that's where you define who does what, how they do it, in the timeframes they do it, where your policy is more broad, stating that you have a vendor management program, that you have policies and procedures that are in place of this. The other piece that I would note regarding new vendors, make sure in your agreements, and we'll talk about this a little bit later too, make sure that you put in those agreements that they have to provide you due diligence information going forward, or it could be grounds for termination. We run into issues where you have companies that are privately held, or different things where they won't provide you certain things. You need to have that information defined upfront in your agreement as to exactly what they will provide you with new vendors.
Perfect. Yep. Oh, go back one. Okay. Couple more things here. Do they define reporting requirements to management? Because I think that's real important. You want to make sure that at least annually that you're kind of given an update on how your vendors are performing. So make sure that your procedures say whether that maybe you have a audit or supervisory committee or a board that wants to see more frequently, then it should be addressed in your policy. But make sure you have that included. Do they set limitations to control the pace of the program growth and allow time to develop experience with the program or third party? A lot of times we will start with certain things, and then it may be a vendor that offers a variety of products and services, and we kind of just totally jump in bed with them and we don't like take it slow. So I just, take your time when you're looking at a new vendor. This goes back to the new vendor thing. Don't go all in all at one time, kind of see and get your experience with them. So next page. Does the credit union monitor the performance of the third party relationship in terms of their profitability, the benefit that they're offering, and the service delivery? And this was a struggle for me when I was there because, you're kind of involved at the beginning. If you're the person that's doing the vendor due diligence and you're kind of involved, but from there, usually the contract owner, whether that be lending, whether that be operations, whoever it is, they kind of handle that relationship with the vendor. And sometimes you don't know that they're having a problem. So that again is when you're doing your monitoring, touching base with that owner of the contract within your credit union, that's the one that has that relationship, and say, hey, are they keeping up their bargain? Because I have seen credit unions where, and this goes back to the service agreements that Kelly will be talking about later on, but I've seen credit unions get refunds back because they haven't held up their part of the bargain. So I think it's very important that those things are documented and can be used on going back to them saying, you're not holding your part of the bargain. If the credit union relies on a third party to provide this type of information, are clear controls in place? This goes back to that transaction risk, making sure that clear controls. If you need to do independent testing, is it done? Measuring their performance, sufficient infrastructure and experience to monitor the third party. All those things need to be documented. Okay, next page. Is ongoing monitoring being performed? Do you have an audit of them? In Georgia, the rule that I mentioned at the beginning, and this should be included in the contracts, because Georgia says if a third party is doing something on behalf of a credit union, that they can go in and audit them or review things as if they were the credit union. So that should be addressed or talked about with that vendor if you're in Georgia, to say, hey, when you're doing stuff for us, our regulators could come in. I have never seen them do it, I will tell you that, but they could go and say they want to see things that vendor has done, whether it be audits, whatever. But that they're following the terms of the third party arrangement. Is designated staff qualified and responsible, understands that the reports that are produced? Because a lot of times we sign contracts and that's it. We don't go back and monitor them. We don't go back and is it acting how we thought? And I will give you another example. And I have seen credit unions in all 3 states being written up for this, and it's more so on the BSA side, but I have seen credit unions being written up because they're not doing validations of the third-party system that they're using. They're not validating it. So it's like trash in, trash out. Is the correct information going into those systems? And are you validating that they're using that information? And is it the correct information that should be used? So sometimes you need to make sure and look at reports to see that, to determine that if that's the case. So next page. So in summary, credit unions must have a third-party program in place that includes policies and procedures. Yeah, so I got a question here about the validation. So so it's a system that a lot of credit unions use for their BSA monitoring. So a lot of times when a vendor comes in, they kind of help set up the program, and they you know, your core system is talking to the system that you have contracted with the company. So a lot of times no one is involved enough to know, has everything been set up properly? And doing a validation to make sure that, so in the case of a money laundering system, that should be taking your information and talking to the system that I'm trying to figure out how to explain this really. It is what you're getting out on the other end, what you need, if that makes sense. Hopefully.
And Laura, I can add another couple examples to that.
Okay.
I'm going to take CUFM, for example. Okay, we do vendor management for credit unions. Validation is the fact that we collect the due diligence for your vendors. When an examiner comes in and they look at your vendors and your due diligence and stuff, if we're not doing our job, you're going to potentially get a finding or a DOR.
Right.
Another example would potentially be a marketing company. Okay, you have a marketing company that sends out flyers or sends out things for your to your members regarding things. Are they doing it in the timely fashion that they say that they're doing it? Are they storing or requesting member data, such as the addresses or potentially the account numbers or the things that they're doing? Are you validating that they are pulling the information the way that they said that they would do it? So for example, the marketing says, hey, we'll dial in and IT can give us access for this 1 hour. Are you validating that IT is only giving them access for 1 hour and that they only have access to that information? You have to have those controls in anybody in place. Now we've got another question that says, will anyone share the company they have used to validate their Verifin program? Does anybody have any information regarding that?
And I do. And if I don't have it right this second, but if you go on InfoSite, which hopefully everybody has access to InfoSite, in the discussion board, there is a topic on that very subject. And there are several companies that folks have listed in there that can do validations on Verifin or any other money laundering system. But I can also get some of those names and send them out. I don't have a specific name of somebody, but I have a list of some folks and you can check with them. Okay. You are welcome. Okay. Thanks. So a risk assessment process. And again, policies and procedures during and after the selection of the third party, because a lot of times, again, I see that, okay, you either get one or the other right, but not both. A lot of times people do all this work up front and do a good job. They get a vendor and then it's just like, that's our vendor. We don't keep up with them after that, but you really should. And like I said, we even got money back from AT&T because they did not hold up to their service, because they had fiber optic line go down that affected our credit union at our main office, and it was down for a good period of time, and we got a refund on that. So definitely making sure that they're keeping up with those service agreements. Again, staff to manage it, the program, reports to keep management abreast of the ongoing relationship and ongoing monitoring. And remember, third-party relationships can be invaluable to your credit union. However, outsourcing of processes or functions does not eliminate your responsibility. You are still responsible for your safety and soundness and the functions and your member relationship. So just because you outsource it doesn't relieve you of any of that responsibility. So keep that in mind when you're choosing vendors as well. And I think that was my section. And that was, like I said, that was an overview of the letters to credit unions that is for all federally insured credit unions. And we're going to move into the next section that will probably answer a lot of the questions if you do have any questions at this point. And I'm just checking the chat, and I think I don't see any additional questions, but if you have any questions or comments, feel free to unmute yourself or type them in there. But if nothing at this time, I will go ahead and pass it on.
Okay, so now we're going to go into the risk assessment, risk rating, and disaster recovery in the initial phases before getting involved in a contract with the vendor. One thing I want to say is that this entire process, there is no one size fits all. We understand that risk is subjective, and every credit union, every credit union's program will not be the same. I wanted to mention that on this call alone, we have credit unions ranging from 12 million all the way up to 5 billion. So what's possible for some may not be possible for others. We're aware of that. We just want to give you some best practices and some ideas to help make your program as successful as possible. But before you start getting into contracts with vendors, let's talk about your program must have policies and procedures in place. So your policy governs how you're going to manage your program. Then you have your process for your due diligence, which would include reviewing your contracts, your periodic reviewing, and your contract tracking. Your procedures is when you gather that information, you review and assess it, and you monitor and report that to the powers that be. Policy and procedures, I always say policies and procedures because I always recommend that those two things be separate. Just like Kelly said previously, from what I hear, it's kind of a headache to every time you want to make a change to your policy, it has to go through several steps. So if you keep those things separate, when you find that your procedures aren't working, you can make changes as you need to make them work to get the results you're looking for, and that can happen often. So we always think it's a best practice to keep them separate. But what do we like to see in policy and procedures? We want to see what's specific to your credit union. How do you define your risk tiers? How do you define your dimensions of risk? How do you identify the critical versus high risk vendors? How frequently are you going to conduct your periodic reviews based on the risk of each vendor that you have? What staff are you going to have responsible for your expectations? Terms of enforcement and penalty for non-compliance. I do recommend putting that in your policy to hold your people accountable for not meeting your expectations. One thing that I have seen in some policies, not all, but say for instance, you may say all contracts exceeding 1 year and or exceeding a dollar value of XYZ amount will be reviewed by legal counsel. Or you may say all contracts that are all critical vendors will be reviewed by legal counsel. But what I do not suggest is that you put things or have things in your policy that you're not going to do, because you will be held based on what your policy states.
Yes, and Keela, that was a good point, because we did get a ding, I guess I would say, they actually had us put in our policy a dollar amount as to when we would get a legal opinion on that contract. So I have seen that happen.
Okay. Oh, and I want to say Policy Pro does have a sample policy. In the last slide of the presentation, you'll see a resources slide that'll give you the policy number for that policy if you need a sample risk assessment. I also have some others that I'm willing to share. I'm not co-signing saying that they're great or you should use them or anything, but maybe having a couple comparing will help you build your own policy. So if you reach out to me, I can share those as well. Now we want to get into some due diligence activities, some things that we need to do before we get in these contracts. Like Laura said, we do recommend looking at a minimum of 3 vendors before you choose one. I recommend doing a risk assessment on each of those vendors before determining which one has the lowest risk, which one fits better with your credit union expectations. Get references from each vendor. Look at or reach out to other credit unions and see how they feel about their services. One thing we know for sure is that people do not mind sharing about a bad experience. So word of mouth will take you far. Check CFPB, see if that vendor has any complaints against them. Do you OFAC your vendors? This is something that often is not done, is not thought about, but your vendors, just like anybody else you haven't done business with, you want to make sure that they're not on the OFAC list. Does the vendor give you an exit strategy? You want to investigate and determine if there's a reasonable way out of the relationship if the need occurs, in case you want to change course for your credit union. If during the due diligence phase in the beginning, if you ask your vendor for your due diligence documents up front and they'll give you hesitation and don't want to share, to me, that's a red flag about what's to come in the future. And I think that should be documented. You should assess the risk and determine, is this the person we really want to do business with? If they don't, and if you ask for one document and they say they won't share that, find out what alternatives they're willing to share with you to show that they're, because you need to see proof that they're in good standing. You want to take notes of things you're discovering and finding out during this process and use those notes along with your risk assessment to sit down and come up with a decision before getting in a contract. Also think about what other factors are important to you when going into a relationship with a third party, whether it be their service philosophies, the quality initiatives, their management style, because you want to make sure their culture and their value and their business styles matches the culture of the credit union. And the relationship should make sense.
Did you advance slides?
Did I advance? No.
Yeah, because the last question we see is, did you OFAC the vendor?
Yeah, I'm still on the same slide.
Okay.
Yeah. Sorry. Oh, another thing to consider is if you need to have the data files transferred to you. Is this going to be done in a way that you can use? How will the data be extracted? What file format? What's the cost to get this information? How long will it take me to get the data? And is there a cost? So if the vendor has a standard customized way to get you the information, but it doesn't work with your system so that you can open it and read it, is there an extended cost for that? You want to know those type of things up front.
Yeah, and Keila, I want to add something here. 2 things that you mentioned. One was in relation to the exit strategy, because a lot of times, and I've seen this in merger situations where the credit union being merged in has actually just signed a core contract for core another 5 years or whatever. And the cost of getting out of those contracts sometimes is very extreme. And I have seen possible mergers fall through because of that, because it just was not cost effective for the credit union coming in, taking that credit union in to take that cost. So there's other ramifications that can help. I mean, that it can cause from not knowing the exit strategy. And then the other thing is what you were just mentioning about data. And this, again, I've been around in the credit union industry for a long time, so I've seen a lot of things. And in the past, we had a vendor that provided us, and we made sure it was in the contract. They provided us with our information or the stuff that they had on their system, but we could not read it. And there was, again, an extreme cost to get that data in a way that we would be able to use it going forward. So these things that you're mentioning are very important and should be looked at in each contract if data is involved, for sure.
I make one note also is I always question vendors who are now charging for due diligence. If you're already doing business with them and you're already paying them, I don't agree with paying them for due diligence. I think it's insane. And I don't know how like they look at themselves in the mirror every day, because I just think it's almost repulsive that they can get away with that.
And that is the cost of doing business, is they are required to provide you the due diligence, and that needs to be written into the contract.
And we have a question here.
Yeah. Is it typical for private companies to refuse financial due diligence documents? It's typical for them to refuse financials. What I would stipulate is if you're collecting this information or asking for this information before you sign them on as a vendor, that you ask for something different. You can ask for peer reviews. You can ask for a letter from their bank that they are still of outstanding client or outstanding credit, so that you know that they're not bouncing checks, that type of thing. Brooke, what are other things you see?
You could ask for a letter of also from their accountant. We want to see not only assets, but we're looking for income, operating expense, interest, taxes, and then definitely their net income. I will tell you that I did see a CEO who is no longer at a credit union because she specifically hired a vendor because they had the better bottom line, the cost, and she did not go out and she did not obtain anything and she did not price around, and she is no longer with the credit union. So I would definitely tell you to do your homework and to collect those items and to make sure that they understand clearly that a lot of credit unions are the ones that are getting their hands spanked when the examiners come in, because they'll just say, well, I don't have to give it to you. Attorneys, oh my goodness, attorneys will send me a 5-page letter as to why they won't send me documentation, and then they'll turn around and bill the credit union for it. Again, I don't agree with that. So I always tell credit unions, if you can add an addendum to the bottom of your contract somewhere that says, we expect X, Y, and Z on an annual basis, and if you don't provide it to us, then that's grounds for termination.
Great question, though. Great question.
Okay. Also, in the initial phases, prior to getting into the contract, I recommend documenting everything that you discover during your investigation. During an exam, you would want to be able to show your examiner exactly why you got into that relationship, be able to back up your decision, as well as if you decided you want to get out of the relationship. Remember, for vendors that use other vendors, you are also responsible for vetting those as well. I would think twice about doing business with vendors who, when you can't get information from them, or information requests are complete, information is outdated, like old financials, insurance, and control reports. The answers to questions may be vague. You have no single point of contact when you need to reach out to somebody. Maybe if the incident history shows issues without proof of testing, those type of things are red flags, and you want to document the risk. And if you come up with an alternative, or show why you chose to do business with them in spite of these situations.
Keela, and I would just add one piece there. There are companies, and we all know it, there are vendors that all use a third party for some reason. Right. One of the ones that I use as a good example are contractors who may be building branches or doing work for you on a branch, that type of thing. Obviously, they're going to outsource electrical, or they're going to outsource certain parts of it. You need to ensure when you hire those contractors that either one, it is in your contract that they are responsible and that they are taking the hit if something happens with that third party, or that you're doing your due diligence on that third party, and that all third parties are disclosed as to who they're going to use prior to you signing the contract. They can't just bring on a third party mid-contract and go, well, I'm going to use this electrical company. That needs to be agreed upon prior to you signing contracts, and that everything is disclosed up front as to who the third parties are going to be used, so that you can ensure that the due diligence is taken care of by them or by yourself. And that if they have to change mid-contract, that there's language in your contract that allows them and allows you an exit out strategy if need be.
And we've also seen that with attorneys, where if you're having to go after a member that's in another state and your normal counsel has to go to another attorney because they're licensed in another state, we had that situation as well. And so we needed to get information on that attorney that they were, because there was a network of attorneys that they were in a part of. And so they passed it on. So you need to also be aware if that's occurring and who's going to handle a case if you're having to go after a member in another state and it's not your counsel that you're familiar with.
Okay. I saw some just doing in my research about having streamlined set of questions directly to each specific type of vendor. Maybe, if you have operations, technology, the groundskeeper. Have y'all seen that credit unions are using that? Because I would love to see what those questions look like. Does anybody do that? Or is it just a generic list? Mostly, do you see that everybody just use a generic list of questions for every vendor, or is depending on the vendor a specific type of question? That's what I'm asking.
For us, we had just a all-inclusive list, and then if they didn't apply, we just didn't use them.
Okay.
Or we didn't answer those questions. But I don't know if Kelly and Brooke have any input on that.
Well, I will tell you, if you utilize CUVM, and I know some folks on this call utilize CUVM, and those that don't, we have a new vendor kit, and we provide that to you as part of our services. It has a standard list of questions that addresses basically just about any type of company that you could need, whether that's a core processor down to potentially a custodian or a janitor that can use that. And it allows them to answer the questions. And if it's not applicable, then they put not applicable or why it's not applicable, so that it covers the facet for every component to it. So there are specific things that are needed more for a core processor or a debit card processor regarding IT procedures and authentication and security and that type of thing. So you need to make sure that those questions are addressed. But we have a standard kit so that it looks the same to an examiner when you're going out there, as you guys have all talked about, that you're researching three different companies. You have the same exact form that all three companies use, and it establishes your business case as to why you chose what vendor.
Okay.
But Keila, I'm with you. If there are folks out there that use specific things, it would be great if you can let us know, or we can share it, or give information to folks, because I think it really helps cut down some of that work for you.
Yeah, I agree. Okay, we're going to get into some disaster recovery considerations. The first thing I would want to ask myself is how much downtime would be crucial for your credit union, and can the vendor meet your guidelines? Has the vendor had branch continuity testing? What were the results? Did the vendor provide you a copy of their contingency plan? Make sure the contract does not include provisions that exclude the vendor from implementing its contingency plans, and make sure the contract is clear on the vendor's responsibility for backup and record protection, including equipment, program, and data files. You also want to make sure that if there is a security breach, you want to make sure that the contract says that you will be notified if your credit union is impacted. Here I provided just a slide for definitions, just so we're clear on what each thing means, because oftentimes critical and high risk vendors are lumped together and they're not always the same. I think it's important that everybody who works in your program understands how you are going to define your vendors, and you're all on the same page. So when you're risk rating contracts, your program is consistent throughout. How to determine vendor risk rating. The first thing I would say is keep it simple. Don't complicate it and make it harder than it needs to be. One of the things you want to ask yourself is, does the vendor have access to non-personal private information? This includes information like social security number, type of account, type of loan, account numbers, amount of deposit, balance due on loans, unsolicited phone numbers, that type of information. When it comes to dimension of risk, we'll talk about that on the next slide. Does the vendor have physical access? Is the sensitive data exposed, and is technology infrastructure exposed? Before I get into the examples, I want to make sure we understand that not all high-risk vendors are critical. However, critical vendors are almost always high risk. So when I think about an example of this, maybe something simple like a bottled water vendor. They bring the bottled water in. Does your bottled water stay housed in a room with your printer or a workroom where you have your loan documents laid out? Is your server in there? I understand that procedurally, we know that vendors should be supervised, but we also know from working in certain locations that when we get comfortable with a vendor, sometimes we kind of just go do what you need to do and they're not supervised. So not following your own policies and procedures as far as that's concerned, that's one issue, but that definitely changed the risk level based on whether or not you're allowing these vendors, a low risk vendor, to have access to this information. Another one would be like document shredding. Since they have access to sensitive data, most people think that they are a high risk vendor. However, getting a new document shredding company is all it would take is a phone call. It doesn't impact your day-to-day business in any way. So changing this vendor is easy, which means it's not critical. It is a high-risk vendor, but it is not considered a critical vendor. Does anybody else have any opinion on this, or is anybody risk rating these vendors differently based on something different I've said?
So Keila, I have an example. Is a lot of times credit unions will like to high risk rate their janitorial service. And I would say that should you have a shred or clean desk policy, those folks should not have access to personal information. So just be pertinent to that, that you know that if you're going to start asking a janitorial company high risk rated for due diligence documents, including a business model, privacy policy, stock report, financials, odds are you're probably not going to get any of that information. They're going to say we're privately held and we don't have all the other items. So just be aware of that when you're going in and doing that due diligence, that you may not get it from those folks, especially if you have those in-house policies.
Yep, I absolutely agree with Brooke, because your other policies can dictate that. So the clean desk policy, that's something to look at. And if you have a shred policy, to make sure that it's being enforced, because if it is being enforced properly, then you shouldn't have to worry about your cleaning crew and your, and they wouldn't, like Brooke said, they're not going to have the documentation that you would normally require for a high risk vendor. So you would have a hard time getting that. So some of your other policies or procedures could be things that dictate. So you got to take those things into account. That's a good point, Brooke.
Are there any non-critical vendors that should be made to sign like a non-disclosure agreement in these type of situations we're talking about?
Definitely when you were talking about like the subcontractors and all, I would definitely have the subcontractors have the NDA. So if there's any breach or loss of data, that there's some kind of indemnification for the liability of that lost information. So if it takes, $100,000 to fix whatever breach, that they would be responsible for that information.
Okay.
Kelly, did you have another one?
No, that was the one that came to mind because I was speaking to that. So does anybody have any questions regarding any of that out there, or companies that they're confused potentially as to what that risk rating should look like? Feel free to throw it in the chat. And you don't have to necessarily use the vendor the name, but maybe just the service that they provide, and we can give guidance on that if you're questioning that.
If you get something, Brooke, Kelly or Brooke, y'all just holler at me and I'll stop
Yeah.
talking, okay?
Well, the other
You
one,
got it.
the other one I always like is the utility companies that credit unions they're like, well, if we lose power, it's our critical vendor. And I would say, well, if you're out of power for 2 or 3 days, odds are everybody else is around you is out of power. We're hurricane and tornado country, and odds are there could be a possibility that you're out of power for a couple of days. But like in Tallahassee, if I want my lights to be kept on, I have to pay the city of Tallahassee. I have no other option. So I tell folks, keep paying that bill to keep your lights on. I understand that you may think it's a critical vendor, but maybe have some backup plan if you have some extended downtimes. Do you have a generator? Do you have burner phones in case of an emergency? Do you have, at one time we had a portable branch, how are you going to be able to service your clients in case of extended downtime? So maybe think of those other options as well.
So now we're going to talk about going to the dimensions of risk. Laura talked about this some. In the resources, we provided you a vendor risk assessment questionnaire that you can use as part of your risk assessment when trying to risk rate your vendors during this process. And it covers all the types of risks except for interest rate, liquidity, and market. If you get a vendor where you need to add that, feel free to add that and adjust the numbers accordingly to the spreadsheet that I sent you. I'm trying to think what else I want to say about that. This document also, I think, can be used for during your ongoing process. So you use the document initially going in at the 12-month review. You look at it again to see if anything has changed, if your risk has changed at all. And I just think it could be it's pretty quick and easy to fill out. I just think it could be used repeatedly to help you during this process. Another thing on the interest rate, liquidity, and market, not everyone in your credit union is going to understand that risk. So that's a good area to involve your CFO if you need help in that area.
And we did have a question come in the chat. I don't think we addressed. It was back to the NDAs.
Mm-hmm.
Yeah.
Kelly, you want to take that?
Sure. Linda, the great question. Are you saying that we should have an NDA for a high vendor's third-party vendor? Each third party doesn't have to sign the NDA as long as your primary vendor signs the NDA that has verbiage in it that states that they will take the responsibility for any third party that they hire. So you just need to make sure that your NDA has verbiage in it that includes information for the third party vendors. If not, then yes, the third parties would need to sign it as well. But again, that goes back to your contract and your agreement prior to you signing the vendor, that if they're going to use third parties, that has to be disclosed to you and that those NDAs are signed. Does that answer your question, I hope?
Yes, thank you.
You bet. Sometimes it's easier to talk than sign it in the chat. I completely understand. Thank you, Keela.
You're welcome. Okay, next slide is this a critical vendor? This is also a resource that I provided with the other documents. This is for people who are struggling to find out on the fence, trying to figure out, is this a critical vendor? And if it is, what documents do I need to get? So based on the points allocated on when you answer the questions, the colors below will tell you what documents you should get from those vendors. We're talking a lot about critical and non-critical and high and low, all of that. But a special note, there are circumstances when a vendor may have no risk. So when you think about vendors such as caterers and sponsorships, it is a such thing. So don't think that you have to risk rate every single vendor when there is no risk involved. I was waiting to see if Kelly and Brooke had any comments. Okay, so I think we're good on that. So now we have.
Oh, sorry, Keila.
Okay, go ahead.
So I do like the no risk rated function that we use at CUVM, and I'll explain that really quickly. Is let's say you buy a piece of machinery, your examiners are going to kind of want to match that you're spending out is matching with the vendors that you're spending money with. So let's say you buy a Xerox machine, and the great thing with CUVM is that you can still put it in the system and let's say put a review out for 5 years. That's the depreciation cycle of that item. So at 5 years, and what are you going to do with that item? Are you going to recycle it? Are you going to sell it? You know, are you going to get something new? But also for disaster recovery purposes, when you're tracking that information, if you store it somewhere, then you could have the year, the make, the model, how much you spent for it. So for insurance purposes, say if your branch was destroyed, then you know exactly how much you spent and what the item was. You can call that vendor and get them ready to go and have that backup item for you in place. So that was just one of my examples.
Okay.
And we actually had a credit union that we did this for several years ago that got hit with a hurricane, that we had all of this information in there, and within literally an hour we had a report to them. And in fact, I think we had the report to them prior to it hitting them, so they had everything in their hands before it all came about.
And it's the Houston Police Department. They were, when Hurricane Harvey hit, they were out of office for over 6 weeks because of the flooding. They were not able to get back into their branches, but they were able to use CUVM and get all their vendors ready and all the items to be replaced because they had all the makes, the models, and the serial numbers ready to go.
Okay, questions for conversation. Okay, so management assumes that the loan company is low risk and should not be included in the vendor program. Is this always the case? My first thing would be to say, based on risk, I would never say it's always the case. Although your loan company does not have access to non-personal private information and there are no dimensions of risk and they do not have access to secure areas, the credit union vendors should have liability insurance since they are on your property and operate machinery that could result in damage or injury while performing services for the credit union. Would this be the same if, of course, if I work for instance, for you, Kelly, during the season when it's snowing all the time and I have a lawn company that comes in and they're responsible for making sure the snow is, what do you call it, shoveled so that members aren't slipping and sliding all over the place. If during that season, would that increase the risk, or would I do something different during? No, it's always the same.
No, it would always be the same, and you just always want to ensure that their liability insurance is covering for personal injury or personal whatever. You want to ensure that their policy has the correct coverage that you would need. So no, it wouldn't change based upon season.
Okay.
We actually have clients in Michigan, and I have personally seen copies of their agreements where 6 months out of the year they get lawn service, and then 6 months out of the year they get snow service. So it's the same exact contract, it just breaks down, but it's the same liability and the same license and the same vendor.
Okay, that's good to know. Other question, what other documents are acceptable if vendor won't or cannot provide the SS18? As mentioned earlier, some vendors do not provide the SS18, even though there's a financial arrangement and they provide high-risk services. The credit union can request some other documents based on their risk in place of those, like a IT general controls audit report, penetration testing results, and an internal vulnerability assessment. And then the credit union can determine if it wants to proceed with the vendor or not. The next question, should the utility companies be a part of our vendor program? Utility companies overall do not provide SSAE18s or insurance certificates, nor a signed contract. The only time you'll have a signed contract with these utility companies if they are a part of your disaster recovery services. Are we all in agreement on those? Okay.
Yeah, I want to add one thing because Brooke mentioned this before with the shred policies. This would also be a case where making sure that your disaster recovery policies cover these things and making sure that either you have a generator or other resources, or you might have a third-party contract with somebody that provides a mobile branch, you know, whatever that may be. Or even in the case, if you don't have an on-site generator, you might have a contract with somebody that provides a generator in those cases. So again, you might have other policies or procedures or programs that can affect your vendor management program.
Okay. Are there any other questions on the things we just talked about? Okay, the next part of our presentation will cover contract review, what should be included, along with some case studies. This part of the presentation will be conducted by CUVM, Kelly Silverdale and Brooke Collins. Let me tell you a little bit about the presenters. Kelly is Vice President of CUVM and has over 20 years experience in financial service with an emphasis in operations, training, and development. She has worked for CUVM since its inception in 2008. Her extensive knowledge of NCUA and state regulations for vendor due diligence and her expertise in organizational development and training implementation make her a valuable resource for credit unions of all sizes. She earned her Bachelor of Science in Finance at the Metropolitan College of Denver and a Master's of Education from Colorado State University. In her spare time, she loves spending time with her two daughters who are 17 and 13 and loves to ski. She is based in Colorado. Brooke Collins began her credit union career in 2009, working with governmental affairs for the League of Southeastern Credit Unions. Before this role, Brooke was a certified exchange specialist, conducting 1031 real estate exchanges and working in the commercial insurance field. Brooke holds a Bachelor of Science degree in criminology and a minor in history. In her spare time, she enjoys traveling and camping with her husband, Will, and youngest daughter, Lauren. Her oldest daughter, Katie, currently lives in Houston, Texas.
Thank you. That was good.
Thank y'all for agreeing to speak today.
All right, you want to go to the next slide, Keela? First of all, just so you guys know, please ask questions as we go along with this, as we're doing case studies. And I want to talk a little bit about, I know Keela talked about the fact of critical versus high risk and the exchange of it. In the CUVM arena, we use a risk rating system of high, medium, low, and no risk. That is our risk rating that's built into our system. So please take that into account when we talk about high risk and critical risk. There, in this type of situation, they're in a case study, they're probably going to be interchangeable. But as Keela said, she had some definitions to help with that previous to that. So if there's any question on that, please feel free to ask or just jump in or whatever. So Brooke, I'll let you go for it.
Thank you. And also I want to add to that, a lot of times when credit unions want to talk about, no, this is my critical vendor, I always like to tell them, in CUVM world, we treat all medium and high risk rated vendors critical. The only difference in items that we don't ask for in regards to high versus medium is a business model. And in some cases, they may not have a business model, but we'll take, a business continuity plan. We'll take their 10K if they have it, because the 10K will give us a lot of additional information like mergers and losses. And a lot of them in the past year have talked about COVID, and we lost $9 million revenue based on COVID. And it's not really their fault if they're showing a $9 million loss this year, similar with hurricanes or tornadoes. We can say yes, they had a loss, but it really wasn't their fault. It was due to this extreme circumstance. So for case study number 1, we're going to talk about low risk rated vendors. So most organizations, like Kelly said, are going to risk rate their vendors high or critical, moderate, low, in some cases, no risk. And we'll go over primarily low, medium, and high. And we talked a little about no risk and the reason why still for tracking no risk vendors. And that could be, like we mentioned, a purchase of an item. It could be a sponsorship. You paid to be a sponsor of this golf tournament or poker run or bass tournament, whatever it happens to be for that year. And if you want your accounting to match with your vendors, then you're still going to track that vendor from year to year. And once you analyze the risk of a vendor poses, you're going to set that risk rating. And again, is my vendor critical? And we always say, go back to that risk assessment worksheet for guidance. That worksheet that Keela gave over and had the point structure. Is it going to say that it's high, medium, or low based on what information are we collecting from that vendor? Are they holding that personal information? How critical they are to our everyday needs? And then, if we did have a disruption of services, how important is that to our day-to-day operations? Vendors who do not interact with critical systems, networks, or data, nor impact day-to-day operations, and I found this online, will be rated low risk rating. Low risk doesn't mean no risk. It just means that there is not as much risk. And then again, in CUVM world, because low risk is such a low risk and they're not monitored annually, sometimes not even semi-annually, that we allow the credit unions to dictate what items they wish to collect on behalf of that specific vendor. And then we wait to see if they've renewed it, to see if they still need to have that information. Can I go to the next screen, Keela? So low risk rated vendors, I wanted to give you all examples, and we talked about some of them. Landscapers, your snow blowers, pressure washers, folks that clean your parking lots, trash pickup. And I've seen in some cases in the credit unions, they'll have somebody who comes in to water plants. They'll have mat replacement companies, office supply providers, print companies that do not receive any sensitive information. I know Kelly mentioned marketing companies, but this would be somebody who's actually like printing the flyer that's going to go out in your statement. They may not have the pertinent information from the statement company, but they're going to create the print that's going to go inside of the statement. Off-the-shelf software, and then purchases like Xerox machines, postage machines, your fax machines, and again, back to supplies, promotional items, sponsorships, charities, donations, your landlords. A lot of credit unions I will see will lease spaces inside of buildings for ATMs. So your utilities, your electric, your water, your trash, not shredding companies, but electric, water, and trash. I still think even though a utility company may not have any risk at all, I still think for disaster recovery purposes that it is beneficial to track, have an emergency number handy. Do you have your client or your customer number? So if you have to call and say, hey, when are we going to get it back up and running? I need somebody to come look at my phone line. That's actually happened here in the office. We've been down on phones and we'll actually have to email somebody to say, hey, I need assistance. And then we'll be back up and running at no time, but they want to have that pertinent information at hand.
Yep. And hey, Brooke, I want to throw something on Xerox machines, and this is the ERM coming out of me, so forgive me, but a lot of times on those Xerox machines, the memory on those machines keep stuff or copies of stuff that you have sent out to members and may have information. So as you mentioned before, where you can track where you purchased them, and if you're going to recycle them, just remember to make sure that they're cleared out.
Yes.
I know
And that, well, no, that goes back to inside of agreements. How do they destroy information? Do they wipe items clean? Do they cross shred is a good word, not shred, but cross shred. Who has access to the shred bins? And you were talking about, when you're allowing folks to come in, when your shred people come in, are they supervised? That's definitely some information to be looking at inside of information security policies as well as SOC reports.
Brooke, I would add one more thing on shreds, not to emphasize this too much, but a lot of shred companies nowadays, when they empty your shred bins, a lot of times they will put things into a secured shred bin themselves. And part of this is because of the fact that they weren't allowing some of the shred people into businesses because of the COVID or that type of thing. So it had to be put into a secured piece there. So sometimes I know your receptionist may be walking around with this person or something of that nature, but it's a good time to ask questions as to how they are doing these things. Because if you're a higher level person within the credit union, you probably don't know, and you just need to understand that risk.
We can go to the next. Okay. So in regards to items that we suggest that you be collecting for low risk rated vendors, agreement. Inside the agreement, we're going to want to know what services are provided, What are the terms? What are the renewal terms? What are the notification periods for cancellation? Any costs associated with is nice to know. Sometimes it's not listed. Sometimes it will be a separate item like cost of services and vendor contact information. And I want to kind of expand on vendor contact information. If you have a sales rep who is selling you a specific product and service, is that sales rep going to be able to provide you with annual due diligence? A lot of times your local sales rep is not going to be able to come up with a certificate of insurance or a copy of their license or privacy policy. They usually would refer that to a third party or the due diligence office manager or whomever that may be. So always know when you're looking for a vendor contact that you're also asking about the due diligence contact. Who is the party that I need to be reaching out to for that information? One of the ones I see all the time are auto dealers, third-party vendors who are going to resell your market. You know, if you've got a sales rep at the auto dealership, are they really going to be able to give you all that information? And a lot of times they can't. So that's why it's important to differentiate between the two types of contacts. Business verification. Do they have a business license, a service license, articles of incorporation, Secretary of State check? Sometimes you can do an online verification, like in the state of Florida, you can go through Florida SunBiz, which verifies their activity and their employee identification number. So it will say, yes, it's inactive, or no, it's inactive, and for what reason. So you can keep that copy on hand. Insurance, coverage and terms. Do they have a bond? Do they have an umbrella? Do they carry E&O? And do you have a loss payee or coverage requirements? A lot of times we'll ask vendors for verification of insurance. Sometimes they'll just send over a general liability policy. And with us covering different credit unions and different products and services, we ask that credit unions double check the certificate of insurance and make sure that the coverage is adequate should you have a loss. If they're saying that I only have a coverage of a bond of $100,000, but your loss could potentially be over $1 million, you don't have enough coverage. So just because they sent you over verification of insurance doesn't mean it's enough insurance. So you want to check that. And sometimes it does change from year to year. So just because they sent you one policy one year and you were at $25 million coverage, I saw one 2 days ago, the following year, and I track it from year to year, the coverage had gone down to 10 million. So that's a very large cut in coverage. Yes, ma'am.
The other piece I would add to that is many companies are requiring cybersecurity insurance. You're beginning to see that. Please, please, please research this. There are a lot of loopholes in the cybersecurity insurance, and you're paying for something that you really, when it comes down to it, may not have coverage regarding this. Please use your insurance folks. Please talk to your attorneys about it, because we are seeing many components to this where vendors are requiring it or that type of thing. And the coverage really isn't the coverage that's stating in policies. So please use your due diligence there as well.
Yeah, and CUNA Mutual, if you use CUNA Mutual, they will help you with that, and you will help you with your contracts.
So one of the things that CUVM does for their clients, and we always say it's very important that when we are building a brand new vendor in the system, that we match the correct vendor because of OFAC reporting. We want to make sure that John's Landscaping in Tallahassee, Florida is not going to be the same John's Landscaping that's in Birmingham, Florida. And we want to make sure that, so when we're pulling OFAC reports every single month and making sure that there's no discretions on behalf of that particular vendor, when that report is dropped in on a month-to-month basis, the vendor, the credit union receives notification, and they can see, is there any issues or no issues, and they can keep that in record. So when their examiners come in house, they make sure that there's no issues with that particular vendor. So again, the OFAC is, it administers and enforces economic trade sanctions in support of U.S. national security, foreign policy objects. So in case anybody wasn't familiar with that. But OFAC should be run on all vendors to assess any legal risk. We run it on a month-to-month risk. And again, I would suggest that it could be run based off of the risk of the vendor. And of course, the higher the risk rating, the more often you should run it. Ms. Keela? Oh, any questions with low risk rated vendors? Anybody have any samples or? No, we're good. Make sure I didn't miss any chat. Okay. Case study number 2 would be your medium risk rated vendors. Since there isn't a clear set of guidelines for what is considered a moderate or medium risk, it may help to start at the top and work your way down. This will ensure that you appropriately identify your high risk rated vendors first. Then we're going to give you basic risk driving questions to determine the inherent risk is medium or high. Does the vendor have access to or store highly sensitive data? And again, this all goes back to that great worksheet that Keela gave you for the risk assessment. And you can do it yes or no. You can do it based off of her point system. Our point system is 1 through 5. And we always tell our credit unions too that if you're ever not sure of how you risk rate a vendor, call your analyst, pick up the phone and ask us. I had a credit union once in California. He's a great guy named Mike. And Mike said, hey, Brooke, I need to know how all these credit unions are risk rating this vendor. And I said, well, there's 3 in California that risk rate them high. And there's 3 in Colorado that all risk rate them medium. And he said, well, I'm in California, so I'm going high because I don't want to go against the grain. And I said, sounds like great logic to me. So, I also always say go higher than go lower. I would rather go out and collect more due diligence that you not need than you need it and you not have it. So it's not really that much more data that you're going to have to collect. But again, nobody wants anybody's hand spanked. So I always say go higher than go lower. Does the vendor directly interact with our customers? And if the answer to one or both questions are yes, you're going to proceed with the pre-due diligence for high risk or critical vendors, if that makes sense. Next slide, Ms. Keela. If the answers to the previous question were no, then the vendor will likely fall somewhere between low and moderate. The questions below are going to help you determine enough risk to categorize the vendor as moderate. So does the product or service have any effect on our members? Does the vendor have physical access to our facility? But again, let's go back to that janitorial and the shred company. How are your policies and procedures affecting that? If they do have, let's say with the shred companies, they do have access to physical and they do have access to your credit union member information. But let's say, do they give you a certificate that says, here's my guarantee that it's been shredded correctly or destroyed or sanitized, and should there be any issue, this is our guarantee to you that we will make it right. Does the vendor provide a product or service that we use to maintain regulatory compliance? One of the things that we do in-house is we actually send through our document portal a CUVM checklist, and we specifically ask the vendors, have you had any business or legal issues? Are there any legal or regulatory changes that we need to be aware of? And when we're specifically going over that risk assessment, we answer using the questions and answers that are provided from the vendor, so that the liability, should there be a wrong answer, the liability then falls back on the vendor and not us, because they are the ones that have answered the questions in regards to legal or regulatory issues. Is the product or service a significant expense? And again, your policies or procedures, I know I've heard before credit unions have said if it's over $50,000, they have to have board approval. Does the vendor process any financial transactions for your organization? And answering no to these questions probably means that you're dealing with a low risk vendor. However, your vendor is most likely a moderate risk if one or more of these questions is applicable. Next slide, Ms. Keela. So this slide is going to talk about some of the medium risk rated vendors. Alarm and security companies, repossession companies. Repossession companies are going to, go out and repo a car, a boat, a motorcycle, an RV. Do they have coverage if they damage that that asset? Record storage and shredding services, insurance broker, could be like employee health, dental, or eye coverage. They're not holding member data, but they are holding some personal information from your employees. Attorney, closing companies, title services, investment services, that would be like your in-house, your IRAs, your 401ks, check printing services, and marketing services. Those are all examples of medium or high risk rated vendors. Does anybody have any questions on those? Or want to know about another example of another kind of vendor that they are questioning? No. I don't want to miss anybody. All right, Ms. Keela, one more. So you'll see that the medium risk rated vendor, the items to be collected have now jumped. So instead of going for just 3 items, we're now talking about 7 items. So the first 3 items are going to be now your agreement. Again, same thing, your provided terms, your vendor contact information, but now we're talking about an NDA. Do they require an NDA? How often does that NDA have to be replaced? So you're going to want to store that NDA with that agreement so that you can obtain their due diligence. That's a lot of times we have vendors that don't want to provide us information until we get that mutual NDA from our mutual clients. Same business verification. And now we're talking about financials. Audited financials, the audit letter or opinion that we were talking about, do they have a letter from their financial institution, a good letter, a good standing, a peer review? Do they have a letter of something if they're not going to provide you with their audited financials? Same thing, red flag. If they're not going to give you financials, you got to question why, or if they're not willing to do the homework to get the other items.
Brooke, I'm going to add there, this is really important, especially coming out of COVID. We are beginning to see things that, do red flags regarding financials and truly looking at what they're doing with their financials because of COVID. We are also seeing examiners do findings or do things regarding documentation because you are not getting SSA 16s or 18s within the 18-month period. Part of that is because of the fact that we couldn't have people on site or people on perimeters to do those types of documentation during COVID and those types of things. So this is a little bit more detail work that you may have to pay attention to and really focus on before going into an exam to make sure that these things look okay, because we are seeing discrepancies or we're seeing issues, and you've got to be able to explain that, or at least say, hey, I spoke with my vendor, they couldn't do this because of COVID, and here's the reasons why, or have an email backing that up to help you.
And to build on that, so the information security. So if, let's say the vendor doesn't have a SOC report, we totally understand that SOCs and SSAEs are very expensive. We also understand that the timeline and COVID issues have not prevented folks coming in and doing those assessments. But that does not mean that that vendor cannot have that information security policies. They could have a change management, asset controls, they can have a record retention destruction policy, they can have a business continuity and disaster recovery program, they can still mention training, they can provide vulnerability and penetration testing verification. There's a lot of information still do on their own without having to do a complete SOC report. And that's definitely going to back up in your exams so that they can say, hey, I've not been able to do this, but I still have the policy in-house to show you that this is how we're going to proceed with our day-to-day operations.
And Brooke, I talked to a credit union yesterday that was actually, if they got SOC reports, so they did that piece. And I think you mentioned this a little bit, but normally in those SOC reports are things that need to be corrected either on the part of the vendor or the credit union in some cases. Is that correct?
Yes, it is. And a lot of times we know what the vendor, what the credit union needs to change, but they will mention like if there's an exception or, they'll say 3 people last year were terminated or they exited, employment and they still had access to the system. This needs to be changed. Is that detrimental to the overall aspect of that vendor? Probably not. But if there's something major and there's a note from the assessment, we will definitely note that. I will say too, a lot of times vendors will send us SOC reports. They are not SOC reports. They are not even close to SOC reports. Sometimes they will send us the, what is it called? The table of contents, right? And we have X, Y, and Z, but we can't read all of that, right? So if you're not giving that information, again, that's where these other policies could actually come into place. If they're going to say, well, we're not going to provide that to a third party. As long as they can provide it to a credit union and that information can still be reviewed, then they should be good to go. But, if there's issues, we definitely try to monitor those issues. We're going to want to know about reputation risk and strategic risk and operation risk and reputation. Did I say reputation? Financial information. But of course, the biggest portion is information security. And that is, they want to know how your information is protected. How is it destroyed? What is your access controls, your change management? Do you have encrypted VPN? How long is your data retained? I'm trying to think of do you have a 24/7 hotline for anonymous, incidents? Do you use IPS, IDS intrusion detection? And what kind of information when was your last vulnerability assessment? Who is your chief technology information officer? All of those questions are coming directly from NCUA exams, and they should all be answered by a SOC report. If a vendor sends you a SOC report that's 35 to 40 pages long, I'm going to most likely tell you that's not enough information to answer the NCUA questions. It's not.
Yeah.
Not,
And
not to throw anyone under the bus out there, but if you have a question or you have something that was posed to you from an auditor or examiner that you're questioning, how should I have handled this or what should I have done? Feel free to throw it in the chat. Again, this is learning moments and learning opportunities. I'm not saying it's a finding. I'm not saying it's a DOR, but if you have a question or you have something you're not sure how to address, please throw it out there and we can try to see if we can assist you, because we do talk to examiners on a daily basis regarding things. And it does vary from region to region. I will tell you, I have credit unions in Hawaii. The Hawaii credit union examiners are completely different than those in California. So things that we address in Hawaii and things we're dealing with in California can be on 2 different spectrums, and we can see different hot buttons. So, but going back to what Laura said this year at the advocacy session, I will tell you vendor management across the United States right now is a hot button. And part of that because of everything that we've gone through with COVID. And, as you see, restaurants going out of business, things going out of business, but new things coming up and new technology companies that are coming up because they've had to emerge through this process. We've got to verify those companies as well.
Right. And the credit union that I spoke with yesterday, they've actually did get a finding for not following through on the SOC report stuff, and have spent the last year going through all their the SOC reports that they collected for their vendors and addressing everything that was in those. So, it's important. And again, to me, and from my experience, as you grow, your credit union grows and you get more vendors, having somebody, a company, CUVM, not, but to help with this stuff is critical, because I don't know about you guys, but I know that I am not, and do not want to be a cybersecurity expert or even want to know what's on those SOC reports myself. But if you're charged with third-party vendor management, in some cases, it's very worth getting somebody. I can tell you from experience. Obviously the credit union that I spoke with yesterday is thinking the same thing.
Yeah.
As from someone who reads them every day,
Yeah.
I would tell you
Yeah.
that
Yeah, I
also, also, some examiners want to see a SOC report. Some will take a bridge letter, some will not take a bridge letter. And again, Kelly, just like she was mentioning, examiners are totally different across the board. Do you have a reference of what we should look for in the SOC report before I present it to CUVM? Do I have a reference? I'm not following.
Linda, give me a little bit of clarification.
Like if the vendor is not providing the documents to CUVM, they provide it to me, you know, I could upload it to, you know, the dashboard, but it may be a few months before CUVM does the review of that vendor. And maybe at that time, we realize, okay, this is only a 30-page stock. This is not enough information. I would like to know that when I first get the stock, to know, give me more.
Yeah, I mean, definitely if you open up a SOC report, and you know, I will have credit, I'll have vendors who will send SOC report, and it's, like I said, I mentioned, it's a cover letter. It's the table of contents. They'll tell us we have one, but I'm not going to provide it to you. But I would tell you an average SOC report is anywhere from 100 to 300 pages long. A good SOC report. If it's pushing 30 pages, now they have a SOC 1, SOC 2, and a SOC 3. I will tell you the SOC 2s are generally going to be better than the SOC 1s or 3. They're going to have a little bit more information. But definitely if you're looking at something when the table of contents is the first 10 pages and it's a total of 35 to 45 pages, there's probably not going to be enough information to do a complete review. And do they have the findings? There should be a section about findings, because the top part kind of says this is our policy, but the bottom part says this is the policies, but this is what we examined and this is what we found. So if it doesn't have that section, I would say it's not enough information, because it doesn't prove the validity of the exam.
Great question, Linda. Great question. All right, Keelia, you want to go to the next slide? We've kind of covered a lot of this.
Okay, so high risk rated vendor is a third-party vendor that has access to your company's sensitive corporate information and handles its financial transactions and has high risk of information loss. A high risk rated vendor is a vendor that is an organization, depends on to run its operations. Would the sudden loss of third party cause significant disruption to our business? Would the sudden loss impact our customers and members? And would the time to restore service without this third party be greater than a business day? And I think I gave some examples. The next slide. And those would be your core processing data, your core data processors, your collateral protection vendors, your IRA services, shared branching, account direct deposit services, business lenders, your internet, your firewall, your network services, and your mobile banking services. And I did know that I mentioned IRA earlier in medium. Sometimes it can be medium, sometimes it can be high. Remember how I always said it could be one or the other. It always depends on how much information is being collected, stored, and could cause a potential risk of loss of information. The next one, Keila. So pretty much, again, same thing, but we're going to add in the privacy policy and then the business model. So does it have a data diagram, an organizational chart of the key members, the acquisitions, ongoing mergers, management analysts of financial performances, and future forecast? Linda, also great question about it. How do I know it's not enough information? Business models and privacy policies should be updated pretty much on a regular basis. If you see something that's like 5 years old and it's a privacy policy or a business model, it's considered outdated by examiners. So, you know, if they have something and it's time stamped or still dated on the bottom, this is good from 2017. I would go back to them and say, this is not updated. It's not within the last 2 or 3 years, and I need to have something updated. Again, insurance coverage and terms. Do they have a bond, cyber, umbrella, E&O, and do you have loss payee or coverage requirements? So pretty much same thing as medium. The difference is we're adding in the business model here.
This is also, just to add in here, this is where you can also add your SLAs, because I know that service level agreements was one of the questions and one of the topics of how do we handle the SLAs? What do we need with our SLAs? Make sure that when you're collecting your due diligence documents and you're reviewing this vendor, you're addressing your SLA agreements if you have those as well. You can create your own document. You can, do whatever you need to do, but make sure in your due diligence documentation that you're also addressing your SLA agreements. If anybody has any questions regarding SLA agreements or how to handle something, feel free to throw that in the chat. Any other questions?
One thing I want to, it's not a question, I just want to throw out there too is when I first started with the credit union that I was at, I was the only compliance person. And the vendor contracts and things were actually handled by the secretary of our CEO. And when I say handled, pretty much she had a copy of the contract in a file in her desk. Examiners came in, and this, gosh, was probably, I want to say, I don't know, 2012, I don't know, sometime, a long time ago, maybe even earlier than that, looking at the contracts. And I will tell you that that's what actually stemmed us creating an enterprise risk management program, was because of those vendor contracts and how they needed to be handled. And I know a lot of even me listening to all the information that we have given today, it is a lot. And there's a lot of credit unions out there that are probably going, oh my gosh, this is so much information to, just even remember or to know. And, that's one of the reasons why we wanted to put on this webinar, so that if you have questions, please reach out to us. If you don't today, definitely reach out to us at some point. But it's a lot, and we're here to help you get through that. We all have experience. Obviously, Kelly and them and Brooke do it every single day. But if you don't have that, you can't think of questions now, we absolutely can help you at some point.
Yeah, and just to add on to Laura, what she said is, even if you do utilize CUVM or you have done it in the past, our analysts are trained to break it down into pieces that are manageable for you, and starting with, what do you have in place? What do you not have in place? And working it into what you can do, because we understand that sometimes this is at the bottom of the food chain as far as priorities of what needs to be done in the credit union. And we completely understand that. So we may say to you, hey, what do you have in place? Do an onboard call, that type of thing. And then from there, we break it out into a manageable process for your size credit union and your staffing needs. Again, I know a lot of you may not have everybody back in the branches at all times to have hands-on contracts or to have hands-on certain documents. So we realize those things. And again, like Laura said, we're all here to help. So please don't feel like you're in this by yourself, because Keela, Bill, Sharon, we're all here to help you.
Definitely.
Okay. Okay, so now we're going to talk about ongoing monitoring. You know what the regulation says, you know what to do before you get into a contract. You've had some examples of some case studies, you know what to look for in a contract. So now that you have your program all up and running, what you need to do is how to keep it ongoing and stay on top of everything that to make your program successful. I still recommend the initial risk assessment that I gave you. That risk assessment can be used when you do your periodic reviews. Basically, what you're trying to determine is, did everything that this vendor, when he came and sold me and courted me and made me feel all warm and fuzzy about this product, did he live up to everything? So you're going to be asking yourself questions like, when I need to reach out to this vendor and talk to them, are they available? Did they share all the documents that I had asked for? Am I comfortable with the documents that they shared? If they could, did they give me alternative documents? Are you having complaints from your members about the services from your vendors not returning calls, or is the system not working? Does the vendor have proper experience? Do you find that when you ask questions, you're not getting the answers that you need? Is your vendor relying so much on subcontractors that it's hindering them from being successful? Is your vendor out of the state you do business in, or are they located in another country, which is keeping them from meeting the expectations from your jurisdiction in your area? Or overall, if the vendor, if you're just not happy, you just got into a contract and you're unhappy with it, all these things should be documented. I think a lot of times why this becomes so overwhelming, because if you, something you do every 12 months doesn't really become a habit. So if I do my initial review and then I don't look at this information again for 12 months, or I skip the 12 months and now one becomes 2 years, then it's even more overwhelming. So maybe looking at it or talking about this, your program once a quarter, following up with the vendor manager saying, how did it go with the vendor in the last 3 months? Did you have any issues? Going ahead and documenting that every quarter. That way, when it's time to review in 12 months, you have a full 12-month history to make your decision to decide how you feel about the vendor. There is no regulatory requirement that says exactly what the frequency of reviews are, but I did find some best practices. When it comes to a critical vendor, of course, every 12 months, high risk vendors, it's at every 12 months, moderate every 2 years, and low risk every 3 years. I would also, when I'm doing this, I would also, like I said, do my risk assessment and review my documentation. For a high risk and critical vendor, what you're trying to see is if that critical vendor is still critical, and if maybe that high risk vendor is now critical and they weren't previously. Do we all kind of agree on these review dates? Is that what you see most often in the field? Okay. Some other best practices are establishing a vendor oversight committee. I know this is easier for larger institutions, but being able to include maybe a person from different departments offers various skill sets, and it helps you to manage your program even more. Creating an oversight committee also helps mitigate risk and assigns a sense of ownership in the process and reinforces the governance of your policy. Some of the best practice I wanted to mention that I see the cracks a lot. Your contracts are signed by both parties. Remember that a contract that is not signed is not a valid contract, and making sure not to leave open dates in the contract. So those need to be reviewed to make sure that they're completed all the way through to the end. Another best practice is maybe to establish a vendor management officer. This person is not in charge of the contracts, and they're not ultimately in charge of the program. They're just the person you're going to put in charge over the oversight of the program, to making sure you're adhering to your policies and procedures. They're going to reach out to the contract manager, remind them about important dates they need to remember, maybe check in quarterly for feedback with the satisfaction of the vendor. In my mind, this person doesn't have to know all about vendor management, but you kind of want it to be somebody who people hate to see coming, because that person is going to be consistent and make sure the job gets done. So another thing to consider, if you are a new vendor program manager, if you're implementing a new program, or if you're just looking to revamp your current program, I would say look at your current processes for vendor selection and vendor management. Once you look at what you're working, what your current policies and procedures say, then you want to look for regulatory policies and procedures deficiencies. Where are we lacking? What are we missing? What kind of errors are you finding? You want to look for miscancellation deadline and on auto renew contracts. Look for inconsistencies in the current risk rating, and provide training to your staff as needed. Earlier when we talked about having separate policies and procedures, this is also good, because when you go in to revamp your current program, when you look at those procedures and they're not working and you're finding problems, you can go ahead and make those changes and update those procedures without ever touching your policy per se, unless you find something wrong in there. Questions? My vendor outsourced to a fourth party. What is my responsibility? Of course, you want to assess the controls of the fourth party to determine their risk level and use those results to determine if you still choose to do business with your third party. Recommend reviewing simultaneously during the ongoing monitoring, as well as have a clear understanding of how your third party monitors the fourth party. My vendor's continuity plan is out of date and has not been tested in a long time. What course of action should I take? Of course, very early, if you do the initial due diligence that we requested, something like this you would catch. But if it's been a while and you haven't touched it, at this point, all you can do is look and see and determine if the risk level of that vendor should increase based on them not having tested or shared this information with you. I would reach out to the vendor and say, give them a timeline to resolve this issue. If the vendor does not meet the deadline, the credit union then has to make a decision about how to proceed in this relationship. I have been assigned to review our vendor management program, but cannot find any contracts or files. Where do I begin? The first step I would say is reach out to accounting and ask to request a list of paid vendors for the past 12 to 24 months. You want to eliminate the no risk rating vendors that we addressed earlier, like associations, members, charities, and subscriptions. If you're still unable to narrow down your list based off of what was provided to you, you can reach out to the person who requested the request through accounts payable and ask them directly who the vendor is. You can also request the vendor list from each department to locate your vendors. And once you get that list narrowed down, you can start building your program based off that list.
Yeah, and Keela, I think that's a great idea to do periodically anyway, just because a lot of times contracts get signed and are not passed on to the person that is actually in charge of the vendor management program. And that's a good way to find out that contracts have been signed that you're not aware of.
Yeah, and Laura, I go with that as well, because great bill control is what is getting paid out of that accounting department, what's in your accounts payable, and what is in your vendor management program. Compare those lists, compare what you've got going out and where the contract is. For those that get handed the vendor management program, you're new to the credit union, you don't know what's happened before, what's gone, and finding those contracts. It's one of the biggest things that we see with CUVM is you've got 5 branches and you have no clue which filing cabinet the contract's in or who had it last and what desk it's on. If worse comes to worse, you request it from the vendor and ask them for the copy of the contract. And if they can't provide it, then long story short is you basically don't have a contract at that point, and then that's a different conversation. So think about those 2 options there.
I'd say it's not only good for new vendors, but it's good for canceled vendors. A lot of times credit unions will send us a master list of vendors to add, and we'll start adding them, and I'll come across businesses that have been closed for years. And I have to go back to them and say, I can't find them, you know, they're out of business. Oh yeah. Or we'll hear back from vendors, and the vendors will tell us this credit union is not our client anymore. So then we have to reach out to them and say, hey, can you verify, you know, that you're still doing business? And that most times it's, oh, I forgot to tell you, we canceled. I'll be like, that's fine, no problem. We'll make the change in the system. But we were still working on behalf of the credit union, collecting that due diligence.
How often in our policies and procedures do you see it where a contract requires multiple signatures before it's valid? Is that something that a credit union can do?
Usually we only, I mean, I've seen a contract with maybe a max of 4 signatures, but majority of the time it's 2. Some larger credit unions require a controller or a CFO to sign off on it as well, just because of the financial that it's in their procedures, that the CFO is now aware that something is being paid out. Because it kind of adds that dual control piece on there, but not always.
Okay.
I will also say it definitely scares me when I hear a credit union say, well, I have to go find the contract. I don't know where it is. And I'm like, you don't know where it is. So how long have you been paying and you don't know where you are? somewhere, but you've got a contract and you don't know where it is. At that point, I'm happy just to take a Word doc that has like the terms, and hopefully I can figure out the dates that it's supposed to be figured out by, but definitely find them, house them, give them access to somebody else. So, you know, if that person, that vendor manager who's in charge has an extended break for some reason, that if, you know, those notifications come up, then somebody else is going to get it, and it's not going to auto renew and penalize the credit union either.
Okay. This last slide here shows some vendor due diligence resources. Only one I want to mention is the training webinars for staff. When you click on this link, you have to type in the topic you're looking for, and it'll pull up webinars from past and ones that are upcoming for that topic. The webinars usually range from, I want to say $250 to maybe $300, but you can attend the live version or you can get the recorded version and use those as training tools if anybody needs that. And that concludes this part of the presentation. Is there anybody have any questions?
I have a couple comments. And one of the things when I make my comments is so that you guys don't have to make the same mistakes that I've made. So, but one comment that I had, and we talked about contracts and negotiation, or what most of the time I see, and even dealing with in my current role with credit unions that are doing contracts with us. If there are things in the contract that you are not comfortable with, you can absolutely ask people to change that contract. Not saying that they will, but there is more that can be negotiated in a contract than the price and the term. So make sure that the contract fits your needs and your credit union. And if that vendor does not want to make any concessions or change anything that you're requesting, then that is another topic to discuss as well. Is this a contract that you want to go to? I mean, is this a vendor that you want to use if they're not going to make any concessions to the things that you need that are good for your credit union? So that was one comment. And the other one about making sure it works with what you got going on at your credit union. And this is also from past experience. We spoke with the vendor, and the product that they were offering looked so awesome. And they could do based on your portfolio. It was a loan product, but based on your portfolio, they could manage the current value of your collateral. And it looked like it was just really a cool thing. I was like, oh yeah, this is cool. When the lending department brought it, and we decided to try it out, and we actually did negotiate a 1-year contract instead of the 3 to 5 that they were wanting. But one of the things that we did not look at was, did it communicate with our loan origination system and where we housed our actual loans? And it did not. It could, if we paid an additional price we were on Scimitar, so we had to have Scimitar write a program so that information could be passed on to the system. So, you know, those are things that make sure you're really looking at these contracts. And when I say a lot of times it's not us that is looking at these contracts in that type of way, but these are questions that you could bring up to the contract owners that will be looking at and say, hey, did you remember to make sure that it talks to our LOS and things of that nature. So those are just 2 comments and learnings that I had from my past experience that I wanted to share.
Okay, if there's nothing else, I think we're going to move on to CUVM to do their demo. I think we got a lot of good information today. Like Laura said, if anybody has think about any questions, please feel free to email us at the compliance@lscu.coop, and we will try to get your answer and follow up with you as soon as we can. Kelly, what do you need me to do to?
Just turn controls over to Brooke and Brooke will display her screen. I will add, I know there are some folks that are on this call that utilize CUVM already. You're welcome to stay on the call if you'd like a refresher or want to ask any questions, but those that are utilizing CUVM, you know, I just want to say thank you and thanks for attending the webinar today with everybody. You probably could drop off if you wish to at this point, unless Keela, you have something at the end you need to discuss.
No, I don't have anything.
Okay, so perfect. All right, so Brooke, I'm gonna let you display. For those of you who are staying on, again, just a little bit about CUVM. We are a vendor management company. We are owned by the League of Southeastern Credit Unions along with 2 other credit union associations. So we truly focus on doing vendor management for credit unions. We have approximately over 200 clients nationwide. We're in 36 states. And we range from asset size from 4 million to 5 billion as far as our clients. So what Brooke is going to show you today is basically how our system works. The way that CUVM works is we literally do all the legwork for you. So we collect the due diligence material for you. We put it into a software that sends automated email notifications to dedicated folks within your staff when documents are expiring or contracts are expiring so that you don't get those locked into automatic renewals that you didn't want before. But we take a lot of the legwork, as Laura talked about, that this is very overwhelming, and it allows you to truly focus on your policies, making sure you're getting the service levels according to your strategic plan and your organization, and allowing yourself to complete reviews of vendors in a timely manner that would help you. So Brooke, with that, I'm gonna let you go ahead and take it away and go into the system.
So first off, can everybody see my screen that says demo Brooke? Yes, you can see. Okay, good. So when I usually do my demos, I usually give everybody a brief about who we are, how we got started as a QSO in Colorado. I talk about that CUVM is a 24/7 web-based platform that the credit union doesn't have access to at any time. What you're looking at is our logon screen. Everybody who is assigned a user in the system is assigned a specific username and password. For security purposes, we do not store passwords in the system, but as you can see, you have the capability, if you forget your password, to reset it. It would send you a notification and you can log back into the system. There are 3 ways that you can use the system. One is an admin, and an admin is capable of looking, editing, adding documents to all of the vendors that are listed into the system for that particular credit union. A user can only look and touch the items that they are specifically assigned to. So let us say that your credit union has 100 vendors that they want to manage. If you only want accounting to look at 20 of those specific vendor contracts, when they log into the system, they are only going to see those 20 items. And then lastly, we have viewer capabilities, and viewer capabilities are for examiners and auditors that you want to grant them access to the system and they can look, they can't touch. CUVM has determined that over the life cycle of a credit union contract, let's say you have 80 to 100 vendors, that we can save between 80 to 100 hours for each of those particular vendors. Let's see what else. What else was I going to tell you? So I'm going to go ahead and log on into the system. That shouldn't be. Second. Okay, so the first screen that when you come to, when you log onto the system, is the task page. Oh yeah, and Kelly was mentioning that our emails are kelly@cuvm.org and brooke@cuvm.org. So if you have any questions and you want to send those to us, you can definitely send those. But when we were talking about how examiners and auditors act totally different in different divisions, we had an examiner out west and they went into a credit union and they said, it's great that you have a vendor management policy, but we want to see that you are receiving the notifications, that you are reading the notifications, and that you're following up with those notifications. So CUVM went in and created this task board for each credit union, and it's going to monitor the productivity of all of your vendors. So green is good, green means go, green means nothing is missing. If it's yellow, it's contract missing. That means that's the only item that's missing. If it's document provision, it means that there's more than one item is missing. If it is an inactive, it's just there, it's being held for storage, or it has expired and is being held currently. We are in the process of scrubbing old information. So if you don't need it and we don't have to store it any longer, we will make it inactive or delete it from the system. Again, for security purposes, we don't allow credit unions to go in there and just start deleting information. We do that so that somebody at the credit union who's really not familiar with that information isn't erasing information. We can always recreate the vendor, but we can't recapture some of that personal information. And lastly, I skipped over red because that's pre-submission. They're in red items because we want you to stop and look at those items first. That means that either a vendor contact's missing. If the vendor contact is missing, we don't know who to send our request for due diligence to. If the terms are missing, then the system does not know when to send out notifications because the terms aren't listed. And if a credit union contact's is missing, we don't know who to send the notifications to. And if a risk rating is missing, that means we don't know which items to specifically request from a due diligence department. So the system will generate tasks, and it will tell you, do you want to edit? Do you want to reassign? Do you want to cancel, or are you okay? So we have different tasks assigned based off of the notifications up top. Is it a contract missing? Is it a general document that's missing? Why is a document missing? Sometimes you will see a notification that says vendor will not deliver to third party. Now that does not necessarily mean that we don't have it. It just means that the vendor won't provide it directly to us. We could potentially find it online. We could be provided the information from a credit union, or potentially sometimes even third parties. So this again is the system, and your analyst would go through this in more detail if you were to sign with CUVM. I don't tell folks you have to sign with CUVM. You've got to have us as a vendor management. We would love to have you, but for examiner purposes, please have your policies, your procedures, and your processes that Keela has so wonderfully covered today in place, so that you're keeping out of trouble in regards to vendor management. So I'm going to scroll over to the contracts tab. And what I want to do is show you the process of should you provide us the name of a vendor. So like I'm going to use Co-op. I think a lot of us probably use Co-op. And I would hit save.
Brooke, we're not seeing what you're seeing.
You're not seeing.
It's getting a delay. I'm just going to add a piece while Brooke's typing here that she's adding Co-op as a contract. As Brooke mentioned, if you sign with CUVM, you do get a dedicated analyst, and we have a team. This dedicated analyst does the data entry for you into this system. So when we talk about getting all your vendors in and getting all this information in there, yes, there is a little legwork in the beginning of this process, but we do all the data entry. All you have to do is provide us some information. We do it in a phased process if you need to. If you have multiple things on your plate, we can do it in a phased process where we say, hey, you know what? Pick your critical vendors, send your critical vendors to us. We can get that in. But I will let you know from an implementation standpoint, from the time that we get the contract signed from you, we usually have most folks up and running fully on board 30 to 60 days max. So if you're looking at a time frame for that, that's how quickly we can get you up and running and in that system. So Brooke has created a contract for Co-op, okay? And this is one contract that she's going to input in for. Go ahead, Brooke.
So yeah, and we provide you with a master spreadsheet, and I also tell my folks, don't reinvent the wheel. If you already have a master spreadsheet, you can send that to your analyst, and your analyst will take as much data as they possibly can from that spreadsheet, and they will help build all that information for you. The great thing with CUVM is we're currently working with around 9,000 vendors. So your Fiserv, your Jack Henry's, your Brinks, your Co-ops, your FIS, all of those vendors are already in the system. It's usually the one-off vendors, the brand new vendors that are local to your specific area that we would maybe need a phone number, an email, and address for in order to build those. And again, that goes back to the OFAC reports that we want to make sure that when we're building those brand new vendors, that we're putting in the correct vendor. So I'm going to start loading in Co-op. And automatically I could see there is Co-op Financial Services and Co-op Member Center. So we're going to primarily choose the Co-op Financial Center services, and they're already in the system. And again, just like the task page, we want to work across the board. Green is good, green means go, green means nothing's missing. So you will see that the vendor contact tab already populated green. And that's because we have already reached out to that particular vendor and we have a due diligence contact. So you're going to see that there's going to be one party, if I can find it. Did I miss it? That's grayed out. Where'd it go? There it is.
It's at the bottom. There it is. Thank you.
So that grayed out party means that that is our particular contact for due diligence. Now, you may find your sales rep, your consultant already in the system. That's great. You could also choose them to receive notifications or just have that information listed at your disposal so that if you needed to reach out to Christy, you could. If your person is not listed there, you have the capabilities to come in and create your own contact. So we would need their first name, their last name, their title, their email, and their phone number. And again, your analyst is going to take care of that and they're going to load it into the system for you. So we're just going to say that, you know, Christy is our contact. Where'd Christy go? And we're going to load it and we're going to save it.
And I'm going to add here too, folks, this is a great tool because we never have turnover in credit unions. Have turnover, whoever is now your CFO or your lending person, they can come in here and they can see exactly who their contact is. They have the access to that phone number and that email address right there. So it keeps everything in a centralized location that allows folks to be able to reach out to somebody quickly and not run around the credit union to figure out, hey, who do I need to contact here?
So then going on to the products and services, we have some built-in departments that you could choose for every single product and service. We also have a master list of products and services. So if you have a specific product or service that's on the list, you can choose from here. You could also have the option to do like going back to those, you know, ATM leases. So if it was at 123 Main Street, you could put that description there. If they provide us an account number or client number, we are going to add that information. Now, because I'm an admin, I can see that information on this screen. But again, for security purposes, if I go back to the primary page where we collect all the information, you will see that that account number is garbled for security purposes. This is our overview page. And again, all of the information that's collected from all of these individual tabs is thrown over to the overview page. And if you want to, it even has the printer option so that you could even print off a hard copy and store it somewhere should you wish to. Now, the terms we're going to find directly from the agreements. Sometimes you have a purchase item going back to Xerox. If you want it for 5 years, you could say, okay, I bought it on January 1st of 2021 and I purchased it and it's good for 5 years of depreciation. The system is going to create you an expiration date. Now, if you're going to, the system's also going to build you some notifications in. If you had an agreement that said you have to give us 90 days notice prior to termination, we want to make sure that you have a notification 3 months. But CUVM likes to go out at least double the amount of time. Sometimes it's 3, 6, 6, 9. It depends on the discretion of the credit union. But we're going to send you a notification prior to sending out this notification. And we're going to tell you 6 months before this term, hey, this policy is coming up for renewal. And in 3 months, you have to give them the heads up whether you're staying or going. If you love them, you can ignore that notification, cancel it, move along, no big deal. If you're not sure and you need the homework period to go out and find a new vendor, now is the time to start doing that. If the system has built-in renewals, let's say for another 24 months, 2 years, then we would load that information as well, as long as it's included in the agreement. Now, you will see that it has not created a new expiration date. It's going to wait for this time to come and expire. Then it will create you a new renewal expiration date, because the system also allows you to amend the terms. So should you have an amendment in the middle of a policy, we can amend it. And what it would do is it would store the new terms on this on the left and the old terms on the right, so that you would be able to see the old terms and the new terms simultaneously and be able to see the changes in the system.
Does anyone have any questions up to this point? Feel free to throw them in the chat or just unmute yourself at this point.
Why is it not saving? Okay.
You'll see that there's some different types of contracts at the top. Sometimes you have that verbal non-agreement, which could be the water person. If you're a owner, okay? This is a great thing, because when it comes to the report package and you need to give a report to your board or to an examiner, we have a built-in report package, and it would show these things so that they would see this automatically.
And yeah, we have a master overview report that the credit union can pull, the analyst can pull for you. We provide it on a semi-annually basis, but it's going to have all the vendors, all the risk ratings, all the terms, the types of agreements, and it's also going to show you the parties that are going to receive notifications. It's also going to list what notifications are sent and when they're sent. So going back to when Keela was talking about making sure that something doesn't expire, that helps you track, and you can take that to the board and say, these are the notifications that we have coming up in regards to renewals. So we're giving you the heads up now. Do you want to keep them or do you want to get rid of them, kind of thing? So the risk assessment, just like the risk assessment that we went over earlier, this is how we risk assess our vendors. We automatically know, like, our core processes are going to be high, right? So if I wanted to come in here and just choose high, not a big deal. But again, if you're not sure, you can come in here and start answering some basic questions, and the system is going to give you a suggested risk rating based off of the answers that you've provided for that particular vendor. So now you can come in and choose the high, which is going to help the due diligence department determine which items we are going to ask from that specific vendor. So we're going to save that. And then one of the other things that the credit union provides to us is they provide us a master credit union user list. So you're not only going to tell us who in the credit union is using CUVM, but what their user levels are. So, and also how we were discussing earlier is that one person who signs the agreement is not always the person who manages the agreement. So inside of CUVM, what we want you to do is always assign one person as the lead. So if we reach out to a vendor and the vendor says, hey, that credit union is no longer a client of ours, then I know to reach out to Casey James, because Casey James is the primary contact. Whereas Adele may be the person that actually manages the contracts. So we would save them. And then on the notification tabs, we can dictate who and what notifications we want them to receive. So Casey's not really sure about getting all the notifications. He only wants to know when things expire. We can actually choose that he's only going to receive the items that expire. And then with Adele, Adele may need to have all of the notifications because she's the actual person that's going to be managing that vendor.
And then, Brooke, can you go back to the client contact page?
Mm-hmm.
Just over on the right-hand side, you'll see two boxes too, where we can replace and delete. So again, going back to turnover, which you never have, if somebody leaves or somebody goes on FMLA or something, and in the meantime, you want to make sure that those notifications are missed, we have the capability to go in and replace those notifications and replace somebody immediately with someone else so that that person's getting the notifications and things don't get missed or dropped. So it also helps you in that aspect so that we can reassign things quickly, or you do an organizational structure change or something of that nature.
We've even had credit unions who have built almost like a dummy email that other users can access that are the same person. so that when they are ready then to hand that off to another party, they can then reassign it again. And we don't have to go in there and individually mark the individual users. So
you can also use department emails. We can put in there accounting. So accounting would get it, finance would get it, and it just goes to the whole compliance department. And then it's within your procedures how they handle it. So it helps that.
Real quick with notifications, one of the things that we also allow for are custom notifications. And I actually like to use this. So if I'm scrolling through and I see that there's something missing on the credit union side, and maybe they just forgot about it or haven't found out the information, I will actually create a custom notification. These can be sent out daily, weekly, monthly, annually. But what I would do is say like missing agreement. I would say, if you'll please forward, I'll be happy to attach. And then I can send it to the parties that I want to receive that notification, and I can save it. And there is that custom notification. And so then like, if I check it again in 30, 60 days and they still haven't sent it, the system actually allows me the ability to go in and resend it and re-edit that notification. So, you know, I use the example too for credit unions. If you're having issues with a particular vendor and you don't want to wait for renewal, maybe you need to talk to them every other month. This gives you that set to send out the reminders to say, hey, we need to talk prior to renewal to see how we are going, if there's certain issues that need to be resolved. And then you have also the running tally of notifications and what you've sent to them. And then that also goes to our notes tab. I love our notes tab. It is so good. It documents everything. Anytime an item is, a document's added, terms are changed, anytime the contract is touched, literally edited, it is all tracked here in the notes section. And this is visible also for your examiners and auditors. So if they want to know, why do you not have a SOC report? Well, sometimes our due diligence department will go in there and note and say, hey, due to COVID, they're behind, and they've told us it's not going to be done in April, it'll be done in September. But you can see when terms are changed, a risk rating is changed, an item is added. All of that information is documented in CUVM, and you have the access to see that. The last
Any questions up till now? Okay, keep going.
The last tab is our documents tab, and that is where we are going to store all of that information that's provided to us either by the credit union or the vendor themselves. So we allow you to call that item, whatever it is, whether it's audited financials, a SOC report, a agreement, we will title that. We will choose which document type it associates with. If there is an expiration date, and then if it's a link or an actual update, dropped in item, we will drop that item in. Now you will see already, I have all of the information from co-op. I have the financials, I have their business model. In this case, they don't require an NDA from the actual credit union, but they required one from CUVM. They have their liability insurance, their license, and their SOC report. And as you will see below, this is all of the information that they have provided to us. So, if there's different types of SOC reports, if there's extra items that they send to us, we're going to put that information into CUVM and you're going to have it. I'm in the demo site, so it's not showing historical items, but down below, we do store items for a couple of years. So if you still need access to that information, you can still go in the system and access it. At this time, you will see that everything is underlined because we have that NDA. If for some reason you were missing an NDA, you could potentially see the items that are in the system, but you would not have access to those items until you get an updated NDA. And again, that's something that CUVM, I actually sent one out for Main Street checks today to one of my credit unions and said, if you can sign this, get this back to me. And as soon as I get it back and uploaded, then you can have access to those items. And again, the overview report, going back and collecting all of that information. Green is good, green means go. If I had the contract to upload it, I could put in something. I could even override the contract for a one-off, or if it was a purchase or use at will kind of thing, I could definitely put that information in there as well. But again, all the information that's collected from the individual tabs is stored here on our overview page. We also have a document library, which is a great resource for if you wanted to do things in-house. Again, reminder, CUVM is primarily a full service platform, and we want to help you take off as much business off your plate as possible. So you can definitely send that information to us. It's not sharing for some reason.
It's not, I don't know what's
I
going
wonder
on.
if it's because I'm on the demo site.
Yeah.
But what it is more or less, it is screenshots of every single tab with instructions on how to work. It's more or less an online manual of CUVM. But we also have onboarding, sample policies, assessments, some just basic information. But again, your biggest asset is going to be your analyst. I love that. I know that when a credit union picks up the phone, they're going to get me, you know, they're going to hear from me when they say, hey, Brooke, I've got a new vendor, and this is the vendor, and this is the contact, and this is the risk rating. When I get it, I put it in the system. I do an easy, you're all set, you're good to go. That way the credit union automatically knows that information's been loaded, and they have access to that information as soon as I send it back to them. I'm trying to think of what else did I miss, Kelly?
Did a great job. Again, the report package is built in, which is great for your board, your auditors, executive management, just as a snapshot of how you are tracking your vendor management, what's working, what's not working. What I would add is we do provide the guest sign-ons for auditors and examiners. So when they come in, it's less you have to pull. Everything's electronic. We give them the guest sign-on. Your analyst can even train them. We train examiners every day because we know they're all new, how to use the system. But those that know us, honestly, if you use us and an examiner walks in and they say, well, we use CUVM, a lot of times they will check the box and move on because they just know, and we have feedback with them. We do feedback sessions with them, and we get things that are changing and what's going on. And so we have that rapport with them, which is great. Any questions, any thoughts? Pricing, let me talk a little bit about pricing. That's everybody's concern is, what does this thing cost? And usually, to be honest, we start with that pricing. Pricing is set up based on your asset size. There is a one-time setup fee, and then there is a monthly fee after that. And it's based on your asset size, and it's a tiered progression. So just to give you rough estimates, smallest asset size range, 0 to 30, a one-time fee would be like $1,100. Your monthly fee would be approximately $200. And then they just tier up from there, depending on.
Oh, do you want to mention limited reviews?
Yes, limited reviews. This is a critical piece, and this is something that we do that none of our competitors do. We provide a limited review of all the documentation that we collect. And Brooke, you can pull one up, hopefully.
Yeah, I was trying to right here.
So what this is as we talked about with Keela and Laura, of all the components of risk, we take all the information that has come in and it goes to our review department, and we literally complete a review of the vendor. So you'll see on the front page, there's all the anomalies, there's the history of the past, things of that nature. And then we literally go into the different sections. So we go into strategic risk and we discuss, are there any vendors? We talk about interest rate and liquidity risk. We do the financial information. We compile all of this for you on 25 of your critical vendors. And so when it comes to complete your review, you have this, what I call Cliff Note version of a review that addresses all these components, and it makes it very simple for you to complete your limited review of the vendor. So when you feel that things are overwhelming or you don't necessarily have that staff expertise, as we were talking about earlier, that potentially knows this is where this information can come in handy, because we've got the staff expertise that looks at this all the time. We provide that limited review for you, which then you can apply to your strategic plan and your organization and make decisions more educated regarding how this vendor is doing.
I want to mention that the questions and the answers, again, are derived from the information that's provided by the actual vendor. So it is not a personal opinion of CUVM. It is the information that is provided to us from the vendor.
I just noticed I left out the or R in my email. So if you have questions, if you want more information regarding this, feel free to reach out to us. Feel free to reach out to Laura or Keela. You also have your BDCs, your business development consultants. All know that you've been participating in this today. They're all gonna, be there to help you. Anybody have any questions regarding CUVM or anything in general regarding the webinar today? We're happy to pose any questions because it's been great information. All right, Keela, back to you.
Okay. Well, this concludes our presentation. If there are no final questions, thank everybody for attending. In a couple of days, you will be receiving a survey. I just ask that everybody please complete the survey and let us know your thoughts on the workshop, what you want to see improve, what we could have done better, what kind of topics you're interested in hearing about for the rest of the year. And that's all I have. Laura, do you have any comments?
Nope, I just appreciate it. Hopefully everyone was able to take something away from today's presentation. Like I said, I know vendor management is very overwhelming and we are here to help. Hopefully you would choose to use CUVM, but if you have any other questions, by all means, please send those to us and we will help you with them if we can. But yes, we appreciate you joining us today and I hope everyone has a great evening.
Thank you all.
Bye-bye.